Hello friends, welcome to Renko Trading Strategy part 3 of this particular video series. We have made part 1, part 2 and this is the part 3 of this particular series, and this is the final video of this particular Renko Trading Strategy is concerned. So even before we start this particular part 3 series video, I would like to show you a small video clip of a football team. I just wanted to give you a few observations from that particular video even before we proceed any further. So let me pull that particular video clip for you. So this is the video. Okay, welcome back. Just viewed Barcelona football team club presentation on their football skills and all those things. I wanted to show you this particular 2 minutes clip. The reason is like there are many observations that we can make in this particular first 2 minutes of this particular video of the football team that they have presented, the official team. So what happens is like I just wanted to share you like what are the observations that we have made from this particular clip of 2 minutes football that we have seen just now. So on your screen right now is the sum up of what we have observed from this particular video clip. So you could hear this particular phrases, these phrases that have been communicated over this particular video. There was a phrase that's called football is all about the ability to keep up the ball. So even in the last video, we have seen that in the earlier days when the Japanese football was introduced, like the objective was to keep the ball in the air. So the objective of any football game is to is the ability to keep the ball in possession. That is the main thing that we need to look at from this particular 90-minute game. The second phrase that you can hear from this particular video is that playing football is very simple. Now you can compare this with that of trading into the stock market. Trading into the stock market is very simple. As long as you have a trading account, anyone can do a trade with the funds available in that particular trading account. So you really don't require too much of knowledge to get in and out of this particular stock. But listen to the next phrase. But playing simple football is the hardest thing there is. So this makes a little very, this particular observation makes it very, very commendable. So what happens is like, even though you know how to play this particular markets, it's all about keeping it simple. So I understand that when we say about simple strategies or keeping the things simple, people hardly believe that simple things works. But my observation and my research says that simple things works beautifully well. And as long as you can keep the things very simple, success will always be with you. So try to keep things very simple and be observant in the market, and always try to speak with the charts more again and again. There's a phrase called, on the commentator would be commenting like, love to watch hoping the passes routine when they are under more pressure. This is what exactly happens, especially with Renko. Whenever the market is under pressure, the pressure means here between the bulls and the bears. So what happens is like, when there is a tremendous pressure between the bulls and the bears to control the position of the market, it is where the Renko or the Henkinashi or whatever the Japanese that they have introduced, like, or all the techniques, that they keep the stress or the pressure of the market completely muted, completely silent, and just hoping on that this particular phase is moved out. Till then the ball is kept so well controlled by either by the bulls or the bears, wherever the market really wants to take us the next step to. So it's all about comparing the football match to that of stock market with that of the Renko trading series that we are presenting. The next phrase that you can hear from that particular video is like, it's all about keeping the ball and waiting the moment. Simple. It's all about holding the position despite the pressure that keeps up. Like we have seen in the, even in the recent past, there was Eurofiel like news saying about the stimulus package that is going to come and all those things. So it's all about holding on to the nerves, holding on to the position that you have, and work under the tight pressures, and holding on to the position, wait for the moment to exit that particular holding in profits. So that is what we can make a comparison of. Fantastic skills touches moves the ball. Where the ball moves around so fast, it's hard for the opponent to make any contact. So it is always like sharpen your skills. I am speaking about the small skills, or small simplest things that we are introducing here, which makes you more skillful, and keep sharpening your skills. Only thing is like that we need to look out for is like, when there is momentum, act very fast, so that the opponent is very hard to gauge what exactly is happening in the market. So this way we can conquer this particular game of stock market trading. The next phrase that we have come across is, sometimes it's once touch football, you can't get close to the firm one touch. So wherever the mariachi that we have introduced last time, like the stop loss, when the momentum is really fast and it's keep moving along the favorable position, the mariachi seldom, the mariachi means the stop loss, seldom comes and get tested. So when the trend is very strong, you really keep moving the stop losses very fast, and when the momentum is too weak, or when there is too much of pressure in the market between the bulls and the bears, when there is tug of war between the bulls and the bears, it is where you need to keep focusing on this particular stop loss, or keep focused with the position that you have. They get the ball forward quickly, keep it on the ground the moment. Keep it on the ground. It's like, keep the money on the side of the trend. That is what we need to infer from this particular video. Always understand the trend with the simple strategies, understand where the market is actually moving, and we need to keep the position onto the ground or to the moment that we have at that particular present of time. Let's move forward. This is just an introduction for the part 3 video that we have made. Moving forward, just a recap from the part 1 and part 2 series of this particular part 2 video of this particular series. Part 1, we have defined how to find out the right brick size. It is all about understanding the brick size. That is the most important part, and that is a key for success of making more profitable trades when it comes to Renko trading strategies. In the part 2, we have given the explanation why we are taking 50% and all the logical numbers that we have introduced in part 1 has been explained in a part 2 video. Along with that, I have also shared in part 2 that original strategy which has been made by the Japanese trader in early 1900s. So in that particular thing, I have given you the zones. This is the boxes that we have introduced. So I just wanted to give you a very clarity on this particular thing. The base or the first 3 candles or the bricks that we were speaking about last time does qualify to be called as a base zone or the zero zone. Okay. So I just want to give you a clarity. So it will be very easy for you to keep moving around, like the base or the zero base candles of first three bricks are the different definition of this particular trend setting. Okay. Now when we come to the zone 1, there is a leverage of one red bar or the opposite brick that we can see. When you move to the second zone, as I said earlier in the last video, when you move to the second zone, it is the two continuous bars that can be given as a leverage. In the 3, it is 3 continuous bars on the opposite side of the trend, which we can give a leverage of. So this is a sum up of what we have seen in part 1 and part 2. Moving ahead, so this is what we have been speaking about again and again. So last time it was not very clearly visible, so that particular video it was not clearly visible, so I thought like I'll take a picture of that particular trade sheet that we have worked out last time and put it across so that you will understand. So I basically made it like there are the 3 zones in this particular zone, like which has been demarcated by the yellow bars here. So in this particular base zone of 1, 2, 3, I can't see any red bars in this particular zone called as the zero zone or the base zone. In the first zone, as I said, like there can be one opposite colored brick that can actually take place. It's okay. That is leeway that we can give for this particular zone 1. When we move to the second zone, we can have a continuous of 2 opposite side brick. And once you are having a third continuous bar of this particular opposite side trend, it means that you are stopped out and the trend has reversed. So this makes the logical explanation for that part 2 of this particular series is concerned. So let's move to today's topic, part 3 of this particular series. In this particular series, we are just going to introduce one indicator. The indicator is probably like based upon the averages. So why averages means like we have seen even in part 1, part 2, and in Henkinashi, whoever has come across Henkinashi classes from us, you will understand that there is always these Japanese traders used to use the averages of things. So they were very fond of averages, and averages means like that is a basic indicator that anyone can work out with, and with the help of averages, they have done beautiful trades. Like even in Renko introduction that we made in Finbridge 3.5 years back, we were giving out EMA 13 as an indicator. So basically, we are interested in keeping the indicator very simple and to the base indicator, which is comprised of that of averages. So we are going to take the help of one of the average based indicator going forward in this particular series, in this particular part 3, to gauge on one particular question. So what is the question that we are going to answer in this particular part 3 of this particular video series? What if there is an indicator which highlights who is in control of this particular ball? So what happens is, like, say suppose if this is a football ground and the bulls are here and the bears are here. The bulls wanted to go across the selling pressure of this particular zone. They want to keep the ball afloat in this particular court, which is controlled by the bears. You need to keep the ball in their court and move across all the way to give a goal in this particular opponent's defendants. Okay, so this is the basic ideology. What happens here is like now we have seen in part A and part 2, part 1 and part 2, we have seen clearly like as long as the ball is in this particular court wherein the higher possibilities of a goal can be made, the ball is in their control and we need to understand how the passes are made. Now in this particular series, we are just going to go in depth of this particular thing, understanding who controls, that is ATR 50% of ATR 14, who controls, that defines. And in the part 2, we have seen a strategy wherein even after so many passes, okay, so just compare passes with that of number of bricks being made, with the number of passes with each zone gets moved across to the different zone, we are giving little leeways, which means once the ball is moved from this particular court to here, the bull market, and as long as the passes is happening here within this particular boxes between the bulls, there can be leeways as we move forward into the higher zones. Okay, now makes little logical, I think. So what happens is like now we need to understand, going into the depth of understanding who really is in control of this particular ball or the trend that we are speaking about. Does the trend get stronger and stronger, or actually getting weaker? So that really defines you to move along with that particular trade. So in this particular part, we are going to find out, we are asking a question to ourselves, is there any indicator which highlights who is in the control, who really is it the bulls or the bears, or how much possession that they have, and how strong is that particular trend is? That is what we are going to answer. Need to understand one thing, this is not a real football match wherein we are going to take sided. As a trader in the stock market, we will be bull as well as a bear. Means if the trend is moving towards on the upper side or the bullish side, we are bulls. As long as the prices moves up, once the price started falling, we become bear, and we started riding this particular trend on the downside. So this is the one difference that we need to highlight. In a football match, we can take sided on one particular team. Here in this particular stock market, if you want to become a successful trader and start making money consistently, then you have to become a bull as well as a bear, depending on how the prices are moving, where the trend is actually taking place. Okay. Now the answer is yes, there is a modern day indicator based on moving averages, which does give us an answer to this particular question. Yes, there is definitely an answer to this particular question. To understand how, who is actually in control of this particular trend and how strong the trend is taking us forward. This is what we are going to answer in this particular part 3 of this particular series. Okay, the indicator is Daryl Guppy's multiple moving averages. You must have heard about this particular indicator, especially if you have followed me over the workshops or the various other presentations in the earlier times. I am quite favorable with this particular indicator, or perhaps I'll say that I don't much use of the super trend or something else, but I keep using this particular indicator again and again. I keep telling everyone that this is a beautiful indicator that gives us an understanding, or helps you to speak with the charts as the time moves on. So this is one indicator which I keep relying on again and again over a period of time. So this has been introduced by an Australian trader. His name is Daryl Guppy, and he has contributed this particular indicator, as well as he's a living legend of the technical analysis is concerned. So you can obviously go and buy his book and understand more in depth of this particular indicator. I'm just going to give you an introduction of this particular indicator and plot it directly on the charts so that I can show you how we can take a little modified version of this particular indicator for our Renko trading strategy is concerned. So Guppy multiple moving averages is a technical indicator that identifies trends in the price of an asset by combining two groups of moving averages with two sets of different time periods. So basically what Guppy says is like there are two type of groups in the market. They are the short-term traders or the short-term groups, and the long-term traders or the long-term groups. We can identify these two different groups by differentiating in terms of grouping few of the moving averages. So this is what he has said. So he has created EMAs of 3, 5, 8, 10, 12, and 15 period on one side, and he colors it on one set of color. This is one set of group, and he colors this particular EMAs, say blue or whatever be it, and he creates another set of EMAs like 30, 35, 40, 45, 50, and 60, and he gives a different color to that particular set of EMAs. Now there are now you can see like this is would be something like this particular stuff. You can see that there are two different set of moving averages visible. Now blue is the short term, and the red that been plotted here would be the long term, or the long term group, or the long term traders. So what happens is like you get two set of moving averages in this particular by plotting these EMAs. Now let's get back to this particular thing. So this indicator or the EMA numbers is very crucial. Don't try to change the EMA by plotting different numbers. This is the set that you need to keep. For the short-term group or the short-term traders, it's been identified as EMA 3, 5, 8, 10, 12, and 15. And for the long-term traders, the EMA set is 30, 35, 40, 45, 50, and 60. So these are the two different trader set that we have created. Now, when there is a lot of separation between the EMAs, this helps confirm the price trend in current action. It is something like this. You will see a kind of flowering happening and deflowering happening when the prices are moving very fast, or the trend is getting stronger as the time passes. So I'll just give you an example, something like this. So in here you can see that as the prices move very fast, these EMA actually started like a flowering shape. Okay, this is very bullish. So what happens is like with the prices moving much faster, the EMA 3 tries to catch that particular position. EMA 5 comes behind them. EMA 10 or 8 comes much below that. So it's like a catch-up game that they want to try to catch that particular running bull that is taking place in the market. So that is a similar case with that of the bearish market. Say suppose if this is the bearish market, everyone want to chase the prices which is actually moving downwards. And you will see a kind, over a period of time, you will see a kind of two different set of EMAs moving a little wider and wider, which gives you more confidence that the trend is actually getting more stronger and stronger. Okay, so this is a basic understanding of this particular indicator. Now, when both the groups become compressed or compressed with each other, or there is a crisscross between these two particular groups, it indicates the price has paused or non-trending. Okay, you will understand that whenever market is trending either on the upside or the downside, the possibility of making money is very easy. Whenever when there is no trend, or whenever the prices started moving in a solid range, that is where when most of the people are trapped, and where both the bulls as well as the bears stop loss is getting triggered again and again. So this indicator actually helps you identify when the market is trending, when the market is not trending, and helps you to gauge how to take your position, how fast you can make the money in this particular market. Okay, now having said all these things, so let us look at this particular diagram once again. So as long as the prices were keeping moving downwards, the trend was very, very strong. As long as the crisscross is happening, this is the crisscross that I'm speaking about, where the short-term trader groups and the long-term trader groups are overlapped with each other. There is no trend. And usually whenever you take a trade in this particular phase, you need to be prepared for taking a stop loss also. Okay, it's something like it will come, hit your stop loss, and again it will start moving to the favorable side. So most of the people get trapped in this particular phase wherein the markets are actually not moving either way with the bulls or the bears. Identification of this is the most crucial thing that we need to understand. Now, having plotting this particular thing, we will go to the live chart. This picture of the live chart that I just put it in this particular presentation. So what happens is like when you are plotting this particular rupee multiple moving averages in this particular Renko chart, what happens is like Renko by its simplicity itself like gives you without any noise, without any sound, it actually gives you where the trend is happening. Now, along with that, if you are plotting more and a trend identification indicator, what happens is like it filters out and clears all the questions that where the exact prices are actually moving in. Now, I'll show you what exactly is happening with uh, the live chart. So this is the live chart that I was speaking about. Now, say suppose when the prices are actually moving in this particular phase, I'm just giving you three examples: this phase, and this phase. In this particular phase, the prices means that the short-term trader group, which has been identified here in the green, and the long-term has been identified to that of red. Don't confuse, this is not the bulls or the bears, it is just the trader groups. Okay, and as a Renko trader or short-term trader, we always love to keep our position with that zone of this particular green only. So we are not bull, we are not bears. As long as the green or the short-term trader group is moving, wherever the prices are moving, we keep accumulating on that particular side. So in this particular trade that I'm speaking first, what happens is like in this particular stage, you will understand that the prices are started falling here, especially this particular phase, and all the averages are in sync, and it is like a kind of a flowering that is taking place on the downside. So this particular trade will definitely give you more profitable, and it can be said like you are most likely 90%, 95% of the time you will end up making fast money in this particular leg. Speaking about this particular trade is happening after a long upside that has happened. After the triple bottom is done, the prices have started moving. Now in this particular series, say suppose if this is the starting of this particular trend, this third break is the starting of this particular trend, you are understanding that the long-term groups is not in sync with the price of yours or the short-term group. Means the prices have started falling, but there is a cluster of support that is going to come in the form of long-term traders. So this is not the ideal way wherein you will be getting a profit. So always remember, in such a trade, be very cautious and always be ready to take a loss in case if it stops anywhere somewhere here in this particular long-term group and started reversing and started moving on the opposite side. So these are the trades where you need to be very cautious of. These are the trades wherein you can relax yourself and be sure that 90% of the time you are going to end up in making profits. This is a trade. Now let's come to the recent trade. You will understand that after hitting this particular see the exact resistance that it has taken from the long-term group, it has started moving again. This is a trade that we are speaking about. Whenever the prices move in between the cluster, the clash between the two groups, it is where you will find that the prices are actually not moving. Here you might have seen only 3 bricks, but in reality you must have seen at least one day where the prices are actually moving in a sideways range. Neither bullish nor bearish. You will actually falling into the trap of this particular thing. Now again, if the last session were concerned, if you were to remember 2 days back in the Nifty, you would have seen that there was a too much of whipsaws that were happening in this particular market. The logic was very simple. As long as your stop loss is taken, I believe that once you take this particular leg on the downside, 2 breaks is the maximum that you can give. Okay, let's plot it and so that we'll understand. First three, you take it for the identification. Next three, and here we go. Once we have stopped out, it actually doesn't create a new bullish on the upside. It doesn't give you a breakdown also. So what happens is like the prices started moving sideways for the Friday session. Basically, what happens is like you will be actually trapped in this particular kind of phase, where there is no actual profitability either on the bullish side or the bearish side. So my suggestion is like try to plot this particular indicator. It's available free, and once you plot this particular indicator, you will understand there are longer trades that are happening. Say something like this. Whenever there is a clear visible flowering that is taking place between the two groups, those are the trades which you cannot miss to afford, because there are 90% chances that you will end up making huge profits in when the markets are actually trending. Whenever the prices are moving in a sideways or congested zones, and it will be indicated by a crisscross or overlapping between two different groups, it is where you can take a trade, but be very cautious and always be prepared to today take a loss in that particular trade. So be very vigilant, and those are the trades where you can have a hedged strategy wherein you can hedge it with the option, um, long call or a long put, or you can take a hedge and according to that particular time frame, or you can actually place a stop loss as well. But the problem is like whenever the prices are moving in a congested zone or the crisscross zone that we are speaking about, there are 90% chances that you will be hit on the stop loss, and again it will carry back on its own journey. So this is the identification of this particular phases. Try to identify uh, trending zone. Try to stick with that particular short-term group or the greens, that green EMAs that we have plotted here. It will definitely help you in taking a profitable trades again and again. Come to the last part of this particular session, that is the trend reversal. So the last part of this particular trend reversals. As long as, see, we have only said about riding a trend on the upside or the downside. Now I just want to give you three important patterns of this particular Renko charting is all about. These three patterns, apart from these three patterns, you can forget about all other patterns. Keep these three important patterns in mind again and again. I've seen many reversals, at least 80%, 85% of the time. Whenever this pattern happens, a reversal is in place. They are the double top or the double bottoms, triple top and the triple bottoms, head and shoulders and inverted head and shoulders. Whenever you see these, any of these three patterns happening in that particular Renko chart, be very cautious. There are high chances that the trend could reverse. 80% of the time, at least, like whenever we say like the previous peak, say suppose if it is 9,000, I'm just giving a random number. If the previous Renko brick, the previous peak was 9,000, then two bars has come down and it has started moving once again. On the first attempt, if 9,000 is not breaking on the closing basis, the new break is not breaking on the first instance, be very careful that there are high possibilities that it can reverse, fall back. So these are the only three patterns that has been working again and again, as long as with the reversals are concerned. So this brings up to the conclusion of this particular Renko trading strategy is all about. So I believe that go back, revisit all these three particular parts again, once again in a full stretch. Once you have understood the part one, part two, part three on a different scale, try to consolidate once again and try to understand how things have taken shape with that of Renko trading strategy is concerned. Then go and work with your own strategy. I appreciate that there are a few viewers of this particular video who has written to me a mail saying that I've started working on the original strategy, wherein I'm taking half of the 9 days of the actual range. So that is the original strategy. So we have given a tweaked one wherein you can take 50% of ATR 14. So I appreciate that people are actually making more efforts to put in more efforts to put in the working of that original strategy or the original one that we have disclosed in part 1 or part 2. So I appreciate them making more efforts. I have seen people started using this particular same strategy with regards to that option charts, wherein they have started making money with the help of options data, especially the ITM and the ATM calls and the puts. It gives me happiness that people have started working. This is a different approach that we have made, wherein not by giving the entire logics and the entire video in one single go. I split it into 3 different parts to understand how your efforts are actually putting it into applying in these particular thoughts. This is exactly what we wanted to do with Speak with Charts, wherein we would like to equip you not by giving you an exact formula, but by making you yourself eligible to speak with the charts and to take whatever small information or insights that we give in this particular video series to take on to the next level of the research is concerned. So thank you so much for watching this particular video series. This marks the end of Renko Trading Strategies. I wish you all the success. Please practice, and whenever you find more information on this particular, please do share with me with that email ID that I have shared here below. Thank you so much for staying connected with us. We wish you all the best, all success trading life ahead with you. And we thank you again for associating yourself with Speak with Charts and staying connected with Speak with Charts. Thank you so much.